Welcome back to the MbaguMedia Finance Podcast. Today, we're diving deep into Beyond the Hype, Coinbase Ventures and the infrastructure revolution in crypto. It's a topic that really gets to the heart of where this technology is heading.
Absolutely. The narrative around crypto has long been dominated by speculation and quick riches. But if you look at the strategic investments, like those from Coinbase Ventures, a different story emerges. It's clear the focus is shifting towards building robust, foundational infrastructure.
Exactly. It's moving beyond just the price of Bitcoin to how these underlying innovations are reshaping value transfer, information processing, and even our digital interactions. Coinbase Ventures patterns suggest a maturation, backing projects that are building the essential plumbing for broader utility.
And this pivot is crucial because it implies a recognition that for crypto to achieve its transformative potential, it needs real-world impact, not just theoretical applications. The past year, especially 2025, seems to have been a turning point, where concepts are becoming operational realities.
The core thesis is compelling. It's not if crypto will be adopted, but how its innovations will redefine existing paradigms. We're moving from proving the technology to integrating it, making it reliable, efficient, and accessible. This is a revolutionary transition driven by infrastructure development.
To really understand this, we need to unpack where Coinbase Ventures is investing. These aren't random bets, they represent a coherent vision. It's like moving from a chaotic, fluctuating chart of trading to a more ordered, interconnected network symbolizing that shift.
Let's start with the first major area, the stablecoin renaissance, redefining value transfer. For years, stablecoins were discussed as a bridge to fiat, but 2025 marked a leap to robust, real-world applications and the systems built around them.
The impact of significantly shortened settlement periods is huge. Traditional cross-border payments take days. When stablecoin infrastructure allows settlements in minutes or seconds, it fundamentally changes transaction economics, addressing major friction points.
And the technology enabling this speed is multifaceted. It's not just blockchain finality, but also off-chain solutions, optimized consensus, and integration layers. The key is robust, compliant stablecoin infrastructure, technically sound and within regulatory frameworks.
When comparing models, fiat-backed, algorithmic, crypto-backed, fiat-backed are gaining traction due to their direct peg. Algorithmic ones have faced scrutiny, and crypto-backed use over-collateralization. Regulatory clarity is crucial for institutional engagement.
Coinbase Ventures' thesis here is likely backing the plumbing, the infrastructure, compliance tools, and interoperability solutions, not just the tokens. This focus is vital for enabling a predictable and scalable digital economy, making stablecoins ubiquitous.
Moving on, let's talk about prediction markets go mainstream, decentralizing foresight. The concept of markets for everything via DEXs is becoming a tangible reality, moving beyond simple trading to risk management and decentralized foresight.
Exactly. It's about creating markets that forecast the future. Instead of just trading Bitcoin, you can create a market for, will inflation exceed 4%, or will this product launch succeed? These markets aggregate collective intelligence for accurate predictions.
The applications are vast. Think insurance, forecasting risks for tailored products. In supply chain, predicting disruptions. Even in politics, these markets can offer real-time sentiment. Market integrity mechanisms are critical here.
Coinbase Ventures' interest is likely in platforms that reliably tap into this decentralized wisdom. They're looking for technical capability and the economic mechanisms to ensure integrity and utility. This moves crypto beyond an asset class to an information engine.
Now, let's discuss interoperability and scalability, the unsung heroes of adoption. These are technically crucial for crypto's future, addressing long-standing fragmentation in the ecosystem.
For too long, blockchains have been isolated islands. Cross-chain communication protocols and bridges are now connecting these networks, allowing assets and data to move freely. This creates a more cohesive Web3 ecosystem.
But building these bridges introduces security challenges. Exploits in bridge protocols have been a concern. Analyzing these risks and the solutions being developed is vital for building trust in a multi-chain future.
Parallel to interoperability, scalability is essential. Layer 2 solutions, sharding, and efficient consensus mechanisms are increasing transaction throughput and reducing costs. Without them, dApps and DeFi would struggle with mainstream adoption.
Coinbase Ventures' focus here is likely on projects solving these fundamental architectural challenges. They want to build the underlying infrastructure that makes the ecosystem robust, efficient, and interconnected. The economic implications of reduced friction are substantial.
This infrastructure development, while not always glamorous, is crucial for unlocking the next wave of decentralized applications and ensuring crypto can scale to meet global demand. It's the difference between a sports car and a highway system.
Next up is decentralized identity and data ownership, empowering the user. This is about returning control to the individual, a core promise of Web3.
For decades, our digital lives have been managed by centralized entities, social media, corporations. This model has risks, privacy breaches, data misuse, lack of user autonomy. The limitations of current systems are increasingly apparent.
Blockchain-based decentralized identifiers, DIDs, and verifiable credentials, VCs, offer a paradigm shift. DIDs let you create and manage your own identifiers, independent of central authorities. VCs are cryptographically signed attestations for verification.
Imagine controlling who sees your data and for what purpose, all from your wallet. This is self-sovereign identity. It significantly reduces risks of mass data breaches and pervasive tracking.
And new economic models are emerging for data ownership. Instead of companies profiting from your data, you could license access to your anonymized data, creating a more equitable value distribution.
Coinbase Ventures' interest in empowering users and decentralizing data control is logical. They're looking for platforms that are technically sound and user-friendly, making it easy for individuals to manage their digital identities and data.
The potential impact on KYC/AML is significant too. Users could present verified credentials from their wallet, streamlining compliance while enhancing privacy. This focus on user empowerment is a core tenet of Web3.
Now, let's look at the new frontier, emerging use cases and unforeseen applications. What's being built on these evolving capabilities?
Mature stablecoin infrastructure enables new forms of digital asset creation and fractional ownership. Imagine tokenizing real estate or art, making illiquid assets accessible through fractional ownership.
Prediction markets are evolving beyond forecasting to tools for decentralized governance in DAOs. They can gauge community sentiment, forecast initiative success, and inform treasury allocation decisions.
The real excitement lies in unforeseen applications from the synergy of these technologies. We're seeing decentralized science, DeSci, for funding research and managing IP. This could accelerate scientific discovery.
The convergence of AI, decentralized storage, and blockchain is paving the way for novel applications in processing and analyzing information. This could lead to breakthroughs in personalized medicine, climate modeling, and more.
Coinbase Ventures' role in scouting and nurturing these nascent ideas is critical. They provide capital and strategic guidance. The success hinges on robust developer ecosystems and strong community building.
This forward-looking perspective highlights crypto's trajectory towards becoming an integral part of global digital infrastructure, moving far beyond speculation to becoming a true engine of innovation and efficiency.
Now, let's summarize the key takeaways from our discussion. We can break this down into key factors, strengths, and challenges.
Under stablecoin infrastructure, the key factor is enabling rapid, low-cost value transfer. Its maturation from concept to reality is crucial. However, regulatory uncertainty and differing models create complexity and hurdles for trust and compliance.
For prediction markets, they harness collective intelligence for forecasting. DEXs offer accessibility and transparency. The challenge lies in maintaining market integrity and preventing manipulation, requiring sophisticated mechanisms and user education.
In interoperability and scalability, the strength is breaking down blockchain fragmentation. The challenge is the security risks in cross-chain bridges and the complex technical hurdle of scaling without compromising decentralization or security.
Regarding decentralized identity and data ownership, the strength is empowering users with control over their digital lives, enhancing privacy. The main challenges are user experience and adoption, making complex tech intuitive, and integrating with existing regulations.
Finally, for emerging use cases, the strength is the convergence of technologies driving innovation in tokenization, DAOs, and DeSci. The key challenge is that success hinges on robust developer ecosystems and strong community building for these nascent ideas.
And that brings us to the conclusion: the infrastructure era is here. The narrative has truly shifted from speculation to the development of foundational infrastructure for the next generation of digital finance.
The maturation of stablecoins, prediction markets, interoperability, scalability, and decentralized identity all signal a market moving towards tangible, real-world utility. The emphasis is on the how, the technology enabling adoption.
Looking ahead, the potential will be realized through unforeseen applications. As these foundational pieces fall into place, we can expect an explosion of innovation, much like with the early internet. The possibilities are vast.
Coinbase Ventures and others are backing a vision for a more decentralized, efficient, and equitable digital future. The journey is far from over, but the trajectory clearly shows crypto's most significant contributions are built on solid, indispensable infrastructure, not just speculation.
It's an exciting time to watch this infrastructure revolution unfold and see how it reshapes our digital world. Thanks for breaking it all down today.
Absolutely. Thanks for joining me. We've covered the introduction, all 5 sections, the conclusion, and the complete summary with its key factors, strengths, and challenges. That's all for this episode of MbaguMedia Finance.